as we have the technology sort itself, uh, glad to be here and welcome back to the session after lunch. I mean, anywhere where we go in the business world, all the words get thrown: transformation, digital, blockchain, automation, artificial intelligence, machine learning, analytics, data lake. I mean, these are all the buzzwords which we, hear again and again. And as finance professionals, it's very, very imperative to ask, okay, all this is nice, but what is in it for me? How does it change my world? Does that mean I have to adopt them? Or as they say, is that something that is just going to run all over, the function that we are doing, and we'll be replaced with something very, very different? So those are the questions which we have. I have a very eminent set of speakers and panelists along with me. I have Kiran from Google. Google is essentially the hyperscaler in the world. I mean, they span across solutions, and very, very, I would call it a technologically consolidated world. Google is one of the very key pillars. So we will hear from Kiran on his perspective on many of these issues. I'm also joined by Prashant. Prashant is from Zoho. He's part of the Zoho's finance and finance offerings, which essentially covers for CFO. Zoho is a made in Chennai company, and proudly so. It comes from a very, very distinct value propositions, more so from SMB market and going up to enterprises, especially for the larger teams. So that's again, we'll hear from Prashant his perspective on this. And finally, we also have Matangi join us. She's from UB. She comes with a lot of data and analytics background. She's the chief data officer at UB. I mean, they call data as a new oil. So today we'll hear from her how data can be a competitive advantage, and how is that we could monetize data, as well as how do we maintain our competitive advantage when we have to share data as it is required in many cases today. So thank you for all joining in. So maybe we could start. The format of this session is pretty straightforward. We have 15 minutes presentation with each of the panelists, then followed by a Q&A from my side, and then we will open up the floor for questions from the audience. So over to you, Kiran.
Thank you very much. Okay. First of all, my apologies for the tech glitches. Okay, I didn't anticipate that I would have misplaced my connector. The worst thing to do, right? I dropped it somewhere at the security this morning or late last night when I was flying into Chennai. My name is Kiran, and I'm based out of Mumbai, and I'm pleased to be here in a city that I quite like. Am I audible now? And I was a bit surprised to see the kind of haziness this morning. I thought it was only for polluted cities like Mumbai and Delhi. I'm hoping it's no more than just the weather playing its games with Chennai. What I'm going to cover, Kamal's briefing was that I should touch upon digital in not just finance as well as in business. So I'll try to keep this as broad-based as possible, and think of this as our viewpoint on how industries should be looking at digital. Okay. I wanted to first start with something that is easy to consume, right? Water. No, that's not what I was referring to. I was basically talking about a message that I thought should land very well, which is oftentimes customers and our partners ask, is digital all about repackaging of what they have done for many years? And depending on who you're talking to, the answer could be a yes or a no. And I want to take this liberty to draw an analogy between water that you find in all of these branded water bottles, right? At the end of the day, it is water, but the value that the water delivers to the consumer depends on the perception of the brand that the consumer has, right? So whether it is water that is infused with smartness, I frankly don't know what that is, or oxygen or herbs or minerals, really depends on who's consuming it and what they are paying for it, right? And therefore, it tends to be very, very subjective, and digital is no different, right? But there is, I think, a much more objective way of defining digital. What does digital mean? And therefore, I go back to the analogy with water, right? Water is pretty objectively defined in chemistry, H2O. Now, when we look at digital, our objective definition is it's a composite of 4 things: technology, process, data, and culture, right? So to us, any of these 4 ingredients missing isn't really digital. And you need to have all of these 4 in fair measure to get to digital outcomes. Okay, so that to me was the starting message about how digital is seen today and where I think we should be going. So I'll be pivoting really hard around the more purer definition of digital, which comprises of these 4 elements. Now, as much as we think we've gotten to a clearer definition of digital, we think it's very complicated business. Why do I say that? Oftentimes, you're dealing with challenges relating to the kind of technology that you need to leverage to go digital. Number 2, you need to debate and discuss and arrive at the extent of the use cases and the depth of those use cases that you want to solve for. And the last one, being finance professionals in this room, you're most concerned about the horizon for the return on investment that you would be making. And to me, all of these are open considerations. So let me get to the first one around technology. There's raging debate about whether you should be using technologies such as the cloud relative to what you have been doing, let's say, in your data center with your traditional technologies, or looking at decomposition of the entire data and analytics infrastructure into data and machine learning or artificial intelligence, as opposed to using monolithic infrastructures. Now, digital natives, I think my 2 panelists sort of represent that world. You can correct me if I'm wrong, but they represent the digital native world. They never had that problem, right? They never had to deal with legacy. They were born in the cloud, they were born with new technologies. But perhaps many of us in this room need to deal with this vexing issue of technology choices that we need to make before we decide to go digital. The second aspect around use cases, right? Are we doubling down on the hardest problems to solve first, or are we looking at experimenting with manageable use cases to begin with, and therefore the idea of experimentation? And I thought that the debit credit representation is a nice way to get warmed up to finance professionals in this room. When you're looking at use cases, you also need to figure out, are you looking to solve for non-technology OPEX reduction? And there's a reason why I'm being very specific about non-technology OPEX. Or are you looking to sort of grow your revenue somewhere, right? So there are trade-offs out there. And the last one, which has been the most vexing problem as far as digital went, how long does it take to get outcomes? Traditionally, we've taken really long to get to digital outcomes. Cloud has come as an accelerator for many of these transformation programs, but then what do you really go with? Weeks, months, right? So to me, this is an important consideration. And therefore, before I move into a couple of examples, I wanted to lay out the fact that what we need is a very balanced approach between outcome focus and technology-led experimentation, right? Those two are quite critical. I could have thought of a better example, but due to the paucity of time, I picked up something that is of recent vintage in the public domain, and we don't need to really worry about non-disclosure agreements, right? So the visual that you see is of Scorpio bookings, right, that Mahindra and Mahindra launched. To me, that's a great example of flirting with digital to drive very clear outcomes in a short span of time, right? It goes all the way back to redesigning an experience for booking of a vehicle like an e-commerce experience would deliver, that would scale with unpredictable demand on the commerce side, and yet can be a reusable technology asset for many more launches to come, right? To us, this is a great example of not just technology, which is being used, but having the organization ready, your ecosystem ready, for example, your dealerships, to fulfill the demand that is being generated in a window of 25 minutes or 30 minutes for those 25,000 bookings, that led to a staggering $2.3 billion outcome for the M&M group, right? To me, this is a good example of a traditional enterprise embarking on a digital outcome. Well, the story may look good, but there was a hell of a lot of work that went behind the scenes, right? Let's get to a few other examples, and there are enough and more examples that we can cite over the last few months and years, especially after the pandemic or during the pandemic. Each of these represent traditional industries, right? And each of them has tried solving for digital in their own unique way. For a moment, ignore the amplification of cloud in all of these PR messages, but the underlying message is they're trying to solve for one of three things. Either they're trying to make their operations smarter, like the conglomerate that you see on the top left-hand corner, or before they get into the digital space, right? Some of you would have read about them going into the super app space. The second is they're either trying to solve for newer business models. So a good example is Manipal trying to venture into the digital healthcare, virtual care space, right? Is a good example of why somebody needs to do digital. And third is defending turf. I am an incumbent in the insurance space and I need to watch out against competition eating my lunch. Can I get more digital ready? Right? So the motivations can be different, but there are very good examples of digital playing out. And I would go so far as to cite the example of a public transport corporation in Pune, now that is embarking on digital initiatives for live tracking of buses, as well as for smarter fleet management, right? So the spread is quite enormous. Now you might ask, digital transformation is great, but what's in it for me, right? All of you perhaps represent the finance function in your respective enterprises, and what does it mean for you? I don't think there has ever been a time before this when such a golden opportunity presented itself to people in the finance function, right? Now you have been the custodians of all of the financial risks and rewards in your enterprises. Why would you not look at the same risk and reward equation with respect to digital? And therefore, there are two roles that you could play. One is the enabler for digital in your enterprise. I don't know if we could take a random vote and say how many of you really think of yourselves as enablers for digital in your enterprises, but I think that number is beginning to increase by the day. And what do I mean by you becoming an enabler for digital? You're basically asking the hardest of questions to your peers and colleagues in the enterprise to make digital a reality. And that goes beyond just sanctioning budgets for technology. Asking them if they have set their North Star metrics right, if they have sized up their people appropriately for the pursuits that they have on hand, or any other measure that will help drive digital outcomes. And the second is for you to become consumers of digital yourselves, right? You got to lead the way and do the right things for others to feel inspired with. And that could begin with democratization of data beyond what you do in Excel sheets and spreadsheets, or for that matter, digitization of documents, or many other processes that are cumbersome today that could do with a whole lot of process improvement and technology infusion. So this is, I think, a great opportunity for finance people to become the lighthouse for digital initiatives in an enterprise. I thought it is appropriate for me to also introduce a new vocabulary that is playing out in the context of digital, although it is pivoted hard around cloud as a technology paradigm that enables digital transformation. FinOps is becoming part of the lingua franca in the finance function. What is it? It's not a canonical definition, right? There is no textbook that will say what is FinOps. At Google, we've been trying to socialize this a lot more simply because we think that's the need of the hour. What does it say? It's an operational framework and a cultural movement that brings technology, business, and finance together to drive value realization, right? And I think this is an area that all of you perhaps need to get much more comfortable with before you embark on digital. And there are pillars to it. The pillar could be around setting up a cloud business office. It could be about having forecasting and planning technologies that will help you understand how technologies get consumed. Number 3, cost optimization, including chargebacks to your profit centers, and measurement and metric frameworks, right? So it could entail a lot of that. So to us, digital without FinOps is also a recipe for a disaster. Now let me come to the 6 unpopular opinions before I sort of hand over to my esteemed panel. Let me start with the first one, right? Unpopular opinion. If you are driving a project that is solely aimed at reducing IT capex or improving uptime in your technology systems, I don't think you should call it digital. At best, it is an IT project. It's not a business project. A digital initiative, for it to succeed, has to be rooted in a business outcome. And to us, that is fundamental to digital success, whether it's in finance or in business. The second, have you created sufficient structure, guardrails for experiments to succeed, or watch out for failures? Do you have people who understand digital? I'll come to that in a moment, right? Because all of you run large budget outlays, and you need to have the processes and frameworks to guard against these. And the third one, time to experience, not time to market. Can you sample what the goodness of a digital project will look like in quick time? Many of you have heard about minimum viable projects or products. Can you take an MVP approach to what you're doing with digital and not wait for a full year, 2 years to see the light of the day? Third, the most vexing problem today in the digital space, talent. Do you have people? Can you build citizen developers, citizen data scientists? Perhaps Matangi will touch upon that a bit as you embark on digital. Fourth one, around what you do yourself, right? If you continue to take an extremely conservative approach to project management, then you're really applying the risk lens to digital initiatives, and that could be a point of failure. You have to give it the runway for it to succeed. And the last one, don't leave money on the table. What do I mean by this? Digital is not about a vendor coming in and doing a project for you for digital to be realized. You need to build partnerships. What that means is you need to have a seat at the table that says, so-and-so is my digital partner. This digital partner can co-innovate with you, build a new way of doing things, instead of just providing goods, services, or labor for digital outcomes to happen. And when a partner brings the ability to co-innovate, you're not leaving money on the table. They have a lot more muscle, they have a lot more expertise than you can ever build by yourself. So time is now right to pick your partner for digital transformation. I want to leave you this with a quote from our CFO, Ruth Poruth. And she says this quite emphatically, that we want to have an impact on society, therefore we go and build a Google Maps, therefore we build Google Health, we build Google Pay. But at every stage, we want these businesses to be accountable. We want every part of our business to sing for their supper. There are no free lunches, right? So as finance professionals, digital cannot be devoid of measuring outcomes. And there are 3 ways in which we do it. I don't want to sort of pat ourselves on our backs. We focus religiously on the user. What does the user want? And therefore, how will digital serve that user? Number 2, think 10x. Don't think that project is the be-all and end-all of the digital transformation initiative. It should be able to apply itself to many more projects in the short to medium term. And finally, you should be able to give people the freedom to innovate. So to us, those are 3 fundamental considerations for digital to succeed. Whether it's in finance or in business, doesn't matter. To us, these principles remain the same. Thank you.
Thank you, Kiran. I mean, that was quite enlightening and setting stage in terms of understanding from a CFO organization's perspective how they should view digital, and putting some of the guardrails for our discussions further. Next, over to you, Matangi.
Hello, everyone. Good afternoon. So, we just saw about digital transformation. So I'm going to more focus my talk on data transformation and how we are doing that at UB, more in the context of, how it can transform the debt market in India, right? So that's the context of the discussion going to be. So I'll share some of my thoughts on this. So I have been kind of working on a lot of digital native companies. So however, data transformation is something that I have seen through overall my career, and UB is a kind of an example of how data transformation can help the financial markets in India. So this is about me. I'm kind of passionate about data and technology, how data can transform businesses. How do you build, Kiran talked about how do you build business impact through digital transformation. So the same thing, I am very passionate about how do you get business impacts through data and adopting data for regular decision making. How do you get this through democratizing data? How do you kind of make sure that certain biases, etc., that happens in decision making when a lot of humans are involved are overtaken by data. So that's my fundamental motive, and that's the principle I live by. I've also authored a couple of books, one on natural language processing, and one recently came out 2 days back on how we can capitalize data for leveraging business impacts. So I'll give a quick introduction to UB. At UB, our core principle is that we are trying to build the debt lending infrastructure for the company. So whichever company wants to raise debt, we want to make sure that they are, raising it with a lot of information, right? So that's where the digital transformation bit comes across. What is a very traditional industry of raising capital? We are kind of digitizing that industry, not only digitizing it, but making information the core of it, right? So whether you're requiring for your working capital, or whether you have any other, your supply chain financing, in any kind of loan requirement that you have, how do you kind of reach out to the right players in the market, and how do you raise capital efficiently as well as within lesser time? And taking this across the nation is our motive, and being accessible and reachable to the to a small scale industry even in remote parts of India is one of the core things of why we exist. So we have a few products in our kitty. I've listed out some of these. For example, in co-lending, it's about connecting fintech companies to large-scale investors who could back those loans. So we are connecting these players through a marketplace in the form of a technology platform, and which is called UB Co-lend, and where the players in the marketplace, which is again the borrowers and the investors, can meet their transactions, can know about each other digitally, as well as make information as the center for a lot of their decisions, then go ahead and make that partnership happen, right? UB Flow is our supply chain financing product, where very small enterprises, which is a supply chain for a large company, can come onto the platform and solve their debt needs through our recommendations and discoveries that we provide across the platform, right? So it's not about, one point I want to kind of stress here is, it's not about digital transformation is only for large organizations. We are also taking the digital transformations to small scale industries as well, and hence help them in their process of growth. UB Invest is where bonds and fixed income component happens. So there are suppliers of fixed income, and then there are companies or distributors or investors or retail investors who would like to participate in the fixed income product. So that's about UB Invest. Corpusitory is a company we kind of acquired. It's very interesting. This is a database of all the companies in the MCA in India, and then insights on them and how they are doing well, etc., so that potential investors, which are banks and financial institutions, can actually fund these companies based on the data that we expose. Pools is our securitization, UB Pools is a securitization platform where, you know, an NBFC which has a large set of accounts, you know, can get back to their working capital by raising money based on pools. Loans is your term loans that companies can raise with the investors. UB Build is our platform on the real estate and infrastructure sector and their needs on raising money from the you know, potential investors. We also have a collections platform where on the behalf of the banks and financial institutions, we reach out to retail players, you know, segment of customers who has to who has to pay back the money and kind of enable, technologically enable, as well as data wise and AI ML wise enable the banks to collect the money back efficiently and also without compromising user experience by understanding customer pattern, by understanding their payment behavior in the past, etc. So that's how our collections piece work. So I'll move on to the next slide where I'm afraid it's a bit loaded, but this is what we would like to call as a debt life cycle. From the time a company needs capital to the time the company gets the capital and post to it on you know, how the transactions are performing and collection. So discovery is the stage where players come on to the platform. You know, they may be digital native, they may not, like fintechs, or they may not be digital native and a large part of their business may be running you know, offline. So we are talking about manufacturing companies, we are talking about you know, MSMEs kind of companies that come onto the platform and use our platform and technology in order to fill their financing needs, right? So discovery is the first layer. After they give their required details, etc., they come onto the platform. And then they list themselves if they have a financing need, they put out the financing need, the specific need, the motivation for the financing need, etc. And then from there, once during the discovery, a lot of you know, data-led initiatives come into play. Some of our recommendation engines or our matchmaking algorithms, personalizing based on what is the right motive for the user, for the borrower to kind of raise loans or raise money, and what is the motivation for the investor, and we connect them using some matchmaking algorithms to meet each other's needs. And of course, we run a lot of CRM campaigns, etc., in order to constantly work with the borrowers throughout their you know, different points in time and different kinds of financing needs. And again, we use a lot of the data that is out there in the public domain or the data that the borrower willingly shares with us in order to help them, you know, manage their life cycle. Our post-discovery, where the borrowers and the lenders meet and the matchmaking you know, algorithm takes place, they are connected, is when the investor starts evaluating the borrower. Again, traditionally, this happens in a lot of so to say, in different systems, not centrally into a cloud environment, etc. So we are trying to bring that space into a you know, digital space on credit evaluation. So again, not only digital transformation, again the data transformation on this is, we would like to help the investors make the right decisions or right evaluation by providing right signals about the borrowers, right? So things that is again on the public, you know, things the borrowers have self-declared, their governance process, so on and so forth, to highlight on the potential risk or potential fraud, etc., of the borrowers to the lenders, based on which the lender applies their you know, rule engines or their processes to make a decision. But a lot of information gets shown at this stage about the borrower to the lender. After recommending you know, let's say 4 or 5 borrowers, the investor kind of decides whom do they want to fund and at what rate they want to fund, right? So we do a lot of AI work at this stage, be it on risk and fraud scoring models. In case of, we talked about a product like co-lending, where there is a bunch of loans and there are a bunch of investors on the side, and we want to match which loan goes to which investor. So we do some level of allocation models, portfolio management, pricing. All of this kind of goes as recommendations to the investor, which they may or may not take. In some instances where they have given a free run for the machine, so the machine takes a decision on behalf of the investor. Post which, we get into the execution stage where this is again a digital transformation thing. A lot of documents that come to us, are just scanned PDF documents or paper which is taken a photograph. So here also we are kind of transforming it by understanding the underlying documents using computer vision, natural language processing, etc. And also reducing by using all of these digitization and using AI and ML, we are trying to reduce the overall turnaround time for credit processing, thereby enabling money in the hands of the borrowers faster, which they can utilize for their business. So that's the core point of it. So during execution, we do a lot of KYC, approvals based on some of the documents that they have updated, some of the loss estimation models, etc. Post which, there's a lot of things. Now the documents get signed, and that's when the deal is done. So certain compliance criteria has to come in. Again, this area has been traditionally offline. We have brought this on a cloud and across the players into the ecosystem, right? So for example, in covenant tracking, certain criteria has to be met for the deal to be valid. So we track that automatically using algorithms and using certain amount of data that we have about the borrower, and to alert the investor at the right point in time. We also do, given that a certain loan and repayment is going on well, what should be the next thing that the investor could engage with the borrower in the form of next best action recommendation. Collections, I briefly talked about it in the slide. So no financial product and service is complete without the money reaching back from where it started. So that's where the collection kind of comes into picture. Again, we enable collection lot through digitally. That's the space we are at, collection tech, where we are collecting on behalf of the banks or the NBFCs for their receivables, using a lot of AI and ML and data, understanding the repayment behavior of the user, understanding what kind of loans have what kind of repayment behavior and in what channel, whether it is SMS, IVR, or emails, what is the right way to kind of reach out to the user in order to kind of alert them for their payment. We start even before the due date is through. So we start from the pre-due stage and we go beyond write-off in collections, and kind of enable a better user experience, because it is not a person knocking at the door for collections. So, but hence, because it's a digitally controlled channel of collections, a lot of experience is well controllable. About even if it is a call center person calling the customer for collections, even those are monitored, monitored digitally. Again, there's a lot of data solutions that run there in order to understand, the verbiage and how an agent speaks to the customer, etc. So that's on the collections bit. So we kind of look at what is the right intervention for the right customer and how should we kind of contact the customer at multiple touch points in order to get the money back, but also provide a good user experience on behalf of the right NBFC and bank. Right? So that's our entire suite, which enables, I would like to call it as a data-driven debt infrastructure, and we want to make financing faster and efficient and also available democratically to a lot of players in the ecosystem, which kind of grows the country as a whole. So that's the larger picture we are aiming at, and this is what I wanted to share with you today. Thanks for patient listening.
Thank you, Matangi. I think this gives a fantastic perspective of how technology has created a marketplace outside, wherein all what is available, like for example for consumer financing, it could be like a bank bazaar. Now in a typical B2B scenario, it's available. in a click of a finger per se. So that's something which is enabled by all the emerging technologies that have come per se. So the next we would have Prashant from Zoho join in.
Vanakkam, everyone. Kiran had spoken about digital, and Matangi gave a lot of use cases on how digital has enabled our organization. I'll focus on a few things that are a little bit more on a practical basis, what you guys do on a day-to-day basis. But before that, a quick intro to our company. Nowadays, a lot of people know Zoho, and we clocked $1 billion in revenue last month. And we have a global footprint, and we have 50 different applications. But what many of you may not know is, much of these applications, the groundwork for all these was laid right here in Velachery several years back. At that time, there was no Westin Hotel, there was no Phoenix Ball. We had to drive a fair distance to have a cup of coffee. So that's our history. And then coming back to today's topic, right? So Kiran explained about what's digital, what he means by digital. I hope in a few years' time, digital finance would be redundant, because when the rupee itself is being digital, right? So digital finance itself may not make much sense going forward. Finance by default has to be digital going forward. So what does the word digital conjure up? Is this any one of these technologies like AI, cloud, blockchain, RPA, any of these? What does this word digital conjure up in your mind? And a lot of people have this question: what do I mean when I say I have gone digital? Is it a process? Is it a particular piece of technology? Or when do I say I have actually embraced digital, right? I've come up with some kind of a pyramid that can help you assess where you are, at what stage are you in your digital journey. At first step, right, we have what is called as digitization. Simply put, it just means that you have completely gone paperless. All your bits of paper are no longer there. Every piece of information is accessible through anywhere, anytime, through devices, through your computer, correct? Next is digitalization. Here we are not just talking about accessibility of information, but process efficiency. That's where automation comes in. If your finance team has to grow lockstep with the growth of the company, right? Every bit of expansion your company makes, the finance team also has to grow by the same amount for the same set of tasks. You probably haven't automated enough. It's something that you need to do. Here we are talking about primarily process efficiencies. And finally, digital transformation. This is when you've embraced digital fully, when you are able to innovate quickly, when you are able to channelize funds to the right activities, when you are able to bring new business models, when you are able to take on quick new opportunities. Can give you an example of a newspaper delivery, right? If instead of accessing the newspaper physically, if you're able to read a PDF copy of that, that's when you have digitized. If the newspaper publisher allows you to pay it online, then they have brought in some process efficiency, correct? So maybe they have digitalized at that stage. But if they come up with a business model where you can interact with the journalists, and they have a subscription plan where you need to pay additional to have those facilities, that's when they have digitally transformed their business. Perhaps a simplistic example, but I hope it works. So again, there are two perspectives to this. The one is the operational perspective, and the other is the strategic perspective for digital finance. One, I mean, if you step back and look right on what finance professionals do on a day-to-day basis, it's primarily focused on these three areas: cost, control, and compliance, right? So in each of these areas, have you adopted the right technologies that you have experienced improvements in these areas. Maybe let's start with cost. So what we have witnessed, and a lot of research shows, is cloud-based solutions represent plenty of cost savings, 30% over on-premise equivalents. We at Zoho ourselves have seen a reduction of around 75% in our IT budget. So that's true for a lot of our customers too. And what are the specific areas from a finance perspective that you need to look into if you want to look at cost? One is accounts payable automation. So today you have, you can absolutely eliminate data entry, right? Technology is available where you can quickly scan the receipt, scan your invoices. You can put the human intervention out of here. You can automatic recording of that supplier invoice that becomes a accounts payable transaction that can be completely automated. You can just record the receipt using your phone, and the automation process should kick off from there. Similarly, not sure how many of you have used this. Right from your ERP, you should be able to pay your suppliers directly. A lot of businesses, what they do is, the information about your suppliers relies in one system. Your banking system is different. You need to juggle between these systems. Your banking system does not know who your suppliers are or how much you owe them. Your ERP system cannot connect to the bank, but today technology allows you to bring all these together, and huge process efficiency gains here. And similarly on accounts receivable front, right? Automation can help you, 20% reduction in DSOs. These are some of the stats that are available. So a huge process efficiency gap. So right question to ask is, what are the process improvements by adoption of technology you are able to bring? Do you provide a self-service portal for your customers for them to pay? Do you need to follow up manually your late paying customers? Do you have automatic reminders? This has an impact on your cash flow, correct? So if your customers pay on time, you bring automation here, it has a direct impact on your bottom line. Yeah. So similarly, one area that a lot of companies ignore is travel and expense. Travel and expense, right, is the second biggest expenditure after payroll. It's the single largest variable expenditure. So, of course, post-pandemic, right, we didn't have much travel at all. We didn't have any travel for 2 years. But what we realize is face-to-face interactions is very, very important. That's why I'm here. That's why we are all here. And that also shows on your sales revenue as well. So, and beyond that, right, why should you consider a T&L solution? So basically, it's optimize your travel process, invest in the right kind of travel. You need to do travel, but do you have control over who gets to travel, for which purpose, how much you're spending on the travel, and are you able to provide a great experience for your employees to smoothen the experience of submitting their employee expenses, travel-related reporting, everything. Something that I really hate is once I come back from travel, I really don't like submitting my travel reports. That's the worst part of the travel, actually, apart from catching the 4 a.m. flight. But so if you have a shoebox like this, it's something that you need to immediately think of getting rid of. And one more thing is, we all travel for business opportunities. Is the travel directed at the right kind of travel expense, right kind of sales opportunities? How do you get to know that? Unless your travel and expense system is integrated with your upstream systems like CRM, and the downstream data flow can give you reports, right, in real time, or at least on a weekly basis. You are able to get to see this. You cannot really get to know whether you are investing in the right kind of travel. So we saw things from a cost perspective. Similarly, from a compliance perspective, right? Today, we joke, right? At Zoho, we have built a lot of products. We push in features every day. But one thing that we have realized is the laws seems to change even more quickly nowadays. With all the geopolitical changes happening, Whenever a GST council meeting happens or something, the law keeps on changing. There's rates, tax rates change, compliance rules keep changing. So you all need to keep up to date with that, right? So typically cloud-based systems help you keep up to date. You don't need to go and manually configure. You can safely assume that the system will take it. That's the job of the system, by the way. And similarly, it helps in invoice clearance, tax validation. It audit-proofs your AR and AP platforms. And things like Foreign Corrupt Practices Act, it helps you adhere to a lot of compliance, this thing. Similarly, if you take our T&T solution, right, something like per diem rates differ from country to country. So all those things have to be updated, correct?